One of Nigeria's favorite dishes, jollof rice, in most instances cannot go without tomatoes. The West African nation, however, is fast running out of tomatoes, which has caused a spike in prices, posing a risk to the inflation trajectory. Dipo Ajayi, head of fixed income at Chapel Hill Denham, joins us with more detail. Thank you so much for your time, Dipo. It seems that every week we're reporting on crop shortages in Africa. We have a shortage of maize in Zimbabwe, and now a shortage of cocoa beans in Ghana and the Ivory Coast, and now tomatoes in Nigeria. Now, all those other countries have cited weather-related challenges. Is this the same in Nigeria, or are there other headwinds?
Well, for Nigeria, it has its own peculiarity. And if you have been following Nigeria's story, you will notice that food inflation is over 40% as we speak, and that's as a result of many factors. You have bad roads, you have insecurity, farmers unable to actually access their farm. But there's the peculiarity to the issue of tomato because sometimes in February, some of the farmers start shouting that they are currently having challenges with tomato Ebola, which is more like an infestation that actually affects that particular vegetable. And now we are currently not seeing the full effect of that because most farmers that actually went to the farm in February, as we speak, they barely can actually get close to 20% harvest from what they actually planted. So this actually created a huge scarcity around these vegetables in Nigeria. And on the back of that, we'll see prices actually jump up by over 200%. Like a basket of tomato that you can easily buy for 30,000 naira, currently trading at 100,000 naira in the market. And this is currently actually pushing food price further upside in Nigeria.
So the main problem is this tomato Ebola. Is there no immediate relief, and how fast is it spreading?
Well, I think the first time this disease was actually first noticed, it was first noticed in 2006 in Spain. And the first time we noticed in African climate was around 2015, or thereabouts. And I think it happened first in Nigeria Republic, then we saw it in Senegal. Before we start seeing it in Nigeria. The first time we saw it in Nigeria was around 2016, and also affected tomato production in that year aggressively, to the extent that most farmers lost over 80% of their yield. And that's exactly what's currently happening. And I guess the proximate cost of some of these things is also the climate change.
Yeah.
There was heavy heat wave earlier in the year in Nigeria, and most especially the southern part of Nigeria that you weren't even expecting to see that level of heat wave was actually heavily affected. And not to not talk about the north that is known for that level of temperature. So tomato being a vegetable that does not need that harsh weather to actually germinate, that also affected productivity. So I think when you sum all these things together, these are some of the reasons why we're actually going through this in Nigeria.
Well, actually, I mean, another headwind is the cost of fuel as well, that many farmers are complaining about. What's the case with this fuel subsidy that was scrapped and now has been reinstated? Is that also having an impact on the inflation picture there?
You see, I think one way or the other, market has already factored that into it already.
Okay.
Because if you remember, sometime last year, fuel price was actually increased to about 650 thereabout. Some places in Nigeria it's as high as 700 naira. And if you notice that inflation figures are already factored in that, because sometime last year a basket of tomato was selling for 3,000 naira. And as at the end of the year, it's already trading around 20,000 naira. So one way or the other, it was factoring that fuel subsidy and hike in fuel into it. But I think the current issue now is the issue of that attack on the vegetables on the farmland, and on the issue of actually restating fuel subsidy. You see, one thing about it is that fuel subsidy has an element of exchange rate volatility. Aside the price in the global market, you also need to know where is Naira trading in relation to dollars. When the president said sometimes May last year, when he said subsidy is gone, and I can remember vividly that the price Naira to dollar was around 750 Naira to a dollar. As we speak today, we are twice that level. So it simply means that invariably, of course, the subsidy is gone. But now the price is still the same as last year, but yet the exchange rate has moved by 100 basis points, 100%. So it simply means that one way or the other, it's either you allow the populace to go back to the street and shout, because I don't think anyone will be able to absorb that currently. Knowing fully well that Nigerians are already going through a lot of things, food prices on the high side, many other things are not working appropriately, electricity tariff has increased, and many other things like that. So I think the government also look at it from the angle that this is not a good time for you to want to further burden the people, and I think that's one of the reasons why they actually have to take that side of it.
Dipo, what low-hanging fruits then are available to the government to stimulate this price relief in the short term, at least?
Well, there's something that the government currently put out sometime last week in terms of one of the things that some of the things they want to quickly do, because over time we'll be seeing the impact of the monetary policy guys in the market, but we are not seeing much of the fiscal policy guys, and a lot of people have been actually on their back that they need to do something, because we can't continue to raise interest rate perpetually in the bid to fight inflation. It gets to a level that it becomes counterproductive, because at the end of the day, finance costs will go up. Companies will actually put that back into the prices of products, and at the same time, will come back to actually now fight inflation from the supply side as well. So I think and that's one of the reasons why the fiscal body guy, they came up with some of the relief. And one of the things they mentioned is that cost of exchange rate for imported goods for some input, so they now actually cap it at 800 naira compared to the 1,400 levels that the rate is currently in the market. One way or the other, they're giving close to about 45 to 50% subsidy in that regard. And what that would mean is that imported good, you expect it to be cheaper than it will always be. And also aside that, there's other palliatives that they're also doing in terms of working with farmers. And I think another thing that we need to also do is the issue of insecurity. I think this is also one of the big elephants in the room, because the government needs to actually ensure that farmers can go to farm easily. Farmers are finding it very difficult to actually access their farm. Some of them need to pay bandits to actually access their farm. And this is not the best way, because whatever they pay as cost of actually accessing farm, they also have to translate it into overall pricing of their product that will be sent to the market. So the government needs to actually work around it. And also another thing is infrastructure. Road network is currently very bad. We tend to see a situation whereby where most of these truck guys usually charge 100,000 naira before. Currently, they are charging close to 1 million naira, and of course, their reason is bad roads. We need to go take a longer distance to actually get to the market and some of these things. So the government needs to actually work around some of these things, so that whatever the monetary policy guys have been doing can be very effective, because now the demand side is holding its part, the supply side also need to hold his own parts of the bargain.
All right. Well, thank you so much for your time and just unpacking that for us, Dipo. Really appreciate it. That was Dipo Ajayi, head of fixed income at Chapel Hill Denham.